Good morning, ladies and gentlemen. Welcome to the show. I'm glad to have you guys here. Today is Tuesday, May 7th, 2019, and I got a lot to talk about this morning. So, without further ado, I'm going to get the chart started right here. And here's what I want to talk about. Auto sales in the United States are really falling bad. And here's a bunch of articles about it right here. Let me close the charts in a little bit so you guys can see a little bit better. As we go down through these articles. Now, they're talking about, they're always blaming the weather. Unseasonable spring temperatures, see? It's not the weather. It's not the weather. People will go out on a cold spring day if they really want a car and buy a car if they need a car. It's not the weather. And then they try to discount it in these articles. Like here's one that says U.S. auto sales decline. It's less scary than it looks, folks. It's less scary than it looks. No, it's scary. It's really scary the way these and the way they've stocked up on inventories. They're stuffing cars on places in farmers' fields, wherever they can put them, brand new cars, and they're sitting there and they're not selling. They've built up an inventory, a huge inventory across the United States of used cars. Now they're going to become used cars. Because after those cars sit there on a giant lot all year and they're not being sold, what do you think's going to happen when the new models come out next year? Or if this really gets bad, guys, they might sit there until the following models come out the following year. This is just bad. This is scary. It says it's not as scary as it looks. That's what they think. Toyota, Lexus, Mercedes, Acura, Audi, Infiniti. Sales drop in the United States. Fiat Chrysler. In April, U.S. auto sales dropped 6.1%. Well, I've heard in some places they're dropping like 50%. Sales. It's just ridiculous. Tough spring, it says, for Canadian car companies. Sales drop again. Why have U.S. auto sales tumbled in April? Tumbled right out of bed. That's because we're going into a recession. That's why. We're on the leading edge. Every country on earth, the United States is holding up a little bit better than some of the other countries because they've become an oil producer. It's as simple as that. Now let's take a look at this article from Zero Hedge. America's $1.6 trillion student debt crisis. Currently there are 44 million students and loan borrowers who owe approximately $1.6 trillion in student debt. Guys, we're on the leading edge of a massive crisis. And I'm watching all the markets very carefully. And I can see the markets have lost ground. Everything's lost ground over the last little while. It's been pumped up. Everything's starting to slide everywhere. It's not just in the United States. It's everywhere. And we got a lot of troubles. And one of the big troubles, one of the big things I'm watching right here, to show you. I'm keeping my eye on it. She's starting to slide. She's finally starting to slide. I mean, after months of going sideways, and I don't know why she's going sideways, but the German bank, Deutsche Bank, she's finally starting to slide. She's down 1.57 points today. 1.57%, I should say, today. She's at 709. She's barely staying above the sixes. When she starts dropping into the 6 euros zone, and people are going to start sit up and take notice and say, hey, what's happening with Deutsche Bank? Deutsche Bank has got like $40 trillion worth of nominal derivatives on their book. This is huge because even though a lot of these derivatives, they play themselves out, like they equalize themselves somewhat, it still is probably going to be like the best part of $100 billion if she goes down, and so that's a mess. Now we're going to jump into the markets right here. And we're going to take a look at what's going on. First off, silver. You know, the silver price has been depressed for so long, and so is gold. This is silver, $14.85 today. It's down 2 cents on the day. Every day I keep coming on here and saying it's down, down, down. Let's take a look at gold. Well, gold's up 60 cents on the day, $12.81.20. 60 cents is nothing for gold because, you know, per unit, I mean, we're looking at $1,281, and it's up 60 cents. But still, it's riding in a certain range, and that range is depressed. Now, if we go and we run over to Bitcoin here, Bitcoin is up. It's 59.65. Let me just refresh the chart to make sure. 59.92. It's always, I keep always saying up, 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 up. Bitcoin is starting to go into a bull market again. At this point, I'm calling it. It's reached my mark where I said it's around $6,000 when it's going to start to go back into a bull market. Now, what do you think's going to happen when an awful lot of people out there say, you know, Bitcoin's up, 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 and gold and silver prices are always depressed, down, down, down? I'll tell you what could actually happen is some people are going to get frustrated. They're going to sell their silver and their gold, and they're going to buy Bitcoin with it because they're just sick and tired of being pushed down all the time. It's just human nature. Let's take a look now at cryptocurrency market capitalizations today. 55.8 billion. 55.8% Bitcoin dominance, with a market cap of 188 billion, $188.5 billion. All these coins are up today. Most of them. And the thing is some of them are up quite a lot, like Ethereum, $177.37. Bitcoin Cash, $295.46. Litecoin's at $76.97. EOS is at $4.96. XRP hasn't went anywhere in all of this. And, you know, if you've watched my show, you've heard me talk about XRP. One of the things I don't like about XRP is the fact that there's 50 billion XRP being held in reserve, you know, and there's 42 billion of them on the market right now. That's a lot of coin. You know what I mean? They're at 30 cents, but they were at 33 cents like a couple weeks ago. And all these other coins have taken a leap. XRP hasn't yet. XRP might. It might. XRP is depending an awful lot on being used as a way of transferring money. And it has a lot of potential. But the thing is, I just can't get that out of my head that there's 50 billion of them being held, you know? That's a lot. Anyway, so we're looking at these coins like Binance coins at $22, and I'll go run over a couple more of them. Stellar is at 9.7 cents, Cardano is at 6.6 cents, and Tron is at 2.4 cents. Monero is $67.29, and Dash is $122.03. Now let's move on to the Dow Jones for the day. We're going to refresh the page here. Down 227 points. Actually, 229 points. You know, what might be moving this market down more than the pressures from these trade negotiations failing? What might be moving it down more is the actual fact that the whole economy is actually starting to turn over. This might be moving the market down more today than the trade tariffs on China. And this is what I'm thinking. We might be starting to go into the leading edge of something that was going to happen anyway. That's my potential point on this. Because all the way across the board, the whole general economy is in bad shape. Retail sales are falling off a cliff. They've been trying to put a really bright, shiny spin on the economy lately, saying, oh, the economy is in wonderful condition and everything else, when actually the economy actually died in 2008, and it's been on life support ever since. These are emergency measures. All that quantitative easing and low interest rates that we've had are emergency measures to try to stimulate a dying economy. It hasn't really been successful. They've never really got a good economy worldwide. The whole thing, ever since 2008, that's when it really died. But it's taken a long time because of the central banks. The central banks have been able to keep this going for much longer than expected. But I think it's starting to roll over on them. They're going to have to, at a certain point, come in and support it. And when they do, this is when they're going to start to destroy the fiat currencies. Let's take a look now at crude oil. It's down 88 cents on the day, 1.41% at $61.37. Now, this is one of your cheaper forms of oil. This is sweet light crude, you know, and it's the one I follow, though. You know, there's different grades of oil. Some of these grades are a little bit more expensive, and other grades are a little bit less expensive. Sweet light crude's a little bit one of your less expensive oils. $61.37 per barrel. That's per barrel price. Let's take a look now at U.S. Treasuries. And what we're looking at here with the Treasuries is we're looking at big drops in the Treasury yields today. Massive buying in the Treasuries all the way across the board. But we notice that the biggest drops are coming in the longer yields. The biggest drops in yields are coming in the longer end of the curve. We see on the short end of the curve, it's not dropping very much. In fact, it's unchanged on the 3-month. We're looking at the highest drop on the 7-year. It's down to 2.36% on the day. Now let's look at the U.S. dollar index. Dollar index is 97.68 today, and it's slowly rising. Well, this does not surprise me. They're coming out of the market. They're going into dollars, you know. They will see the dollar as a safe haven asset when in the initial stages of this crisis. In the early stages of this crisis, the dollar will be perceived as a safe haven asset. U.S. Treasuries will be perceived as a safe haven asset. All that will change as the crisis intensifies. The later stages of the crisis, everything's going to change. Everything's going to turn around. It's going to be turned around on its head. You know, so we're going into the front leading edge of this crisis now. Economically, around the world, it's in a disintegration phase, but it's moving very slowly at first. It might start to move faster later as it gains speed and as it gains momentum. It's slow yet, and it's almost, to a lot of people out there, it's almost imperceivable that there is any change. You have to be on top of these markets to see the changes. And to me, because I'm on top of these markets, these changes are starting to look rather big to me. But to people who are out there who do not really study the markets closely, they would not really perceive these changes yet. The changes are going to get larger, and then they'll perceive it. By the time they see it, you know, I mean, it's going to be absolutely right in your face, glaringly, that we're going into a worldwide recession. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye, guys.